Welcome to this Bell Direct monthly update. I'm Julia Lee, an equity strategist with Bell Direct. And for the month of July, the Australian market has really been moving sideways within a band of about 5,660 points and 5,780 points for the ASX 200 index. We have a look at the market for July. We've really seen quite a flat performance, although the small ordinaries is down by 0.3% and the mid-cap index is down by 0.8% in the month to date so far. So really the action has been in the large cap stocks which have held up the market, and in particular it's the two largest areas of the market where most of the action has been. On one hand, we've seen the financial sector doing extremely well, with the banks bouncing back and a gain of 0.8% for that sector, as APRA wasn't as stringent as the market expected in terms of Tier 1 capital requirements. So the banks really trading capital raising, so the market thinking that capital raisings are off the cards over the next few years. But on the other hand, we've seen weakness in commodity prices, and that's seen the material sector for the month down by 2.7%. Having a look at other markets around the globe, and once again the Australian market has underperformed, and this has been an ongoing theme in 2017. In fact, we've seen the US stock market once again reaching an all-time record high. The S&P 500 during the month of July up by 2%. The FTSE not far behind with a gain of 1.9%. And around the region, we've seen Japan up by 0.3%. The Kospi outperforming with a gain of 2.4%. So as you can see, the Australian share market has underperformed its international counterparts. And I guess a good diversified strategy does include diversification to some of those international markets. Looking at some of the best and the worst performers in the ASX 200 for the month, and we've seen a bounce back for Galaxy Lithium back in favour for the month, up by 16% for the stock. We've also seen Sierra up by 13%, so graphite doing well, and Beach Petroleum in the energy sector up by 13%. On the flip side, we have seen St Barbara Mines down by 14%, Main Pharma losing another 13% this month, and Fairfax losing another 12% this month. I guess looking forward, it's going to be all about the August full-year reporting season. And looking at FY17, market expectations are for earnings growth of 18%. Looking to the year ahead, though, which is the key driver of where the market is going to go, and expectations are for a low single-digit growth rate. So if we do see a good earnings season, what we could see is an upgrade to FY18 earnings expectations, and that would be supportive for the Australian share market. Having a look at some of the themes, in last reporting season, what we did see was what seemed like a bottoming out of mining services. So looking for that to continue and an upgrade cycle to continue for the likes of Downer ADI, Worley Parsons, Seven Holdings, Monadelphous, as well as CIMIC. Also expecting to see a positive performance by Qantas on the back of those lower oil prices and some strong passenger numbers flowing through, and that growth theme continuing on. So expecting to see some good numbers from AGL Energy, Aristocrat Leisure, CSL, Cochlear and ResMed, all shares that have been outperforming and on an upward trajectory in terms of its upgrade cycle. A2 Milk also up there with some impressive upgrade numbers and expecting that to continue. But on the flip side, investors may want to avoid some of those stocks stuck in a downgrade cycle at the moment, and that includes stocks like Telstra, Coca-Cola Amatil, Avio Group, Watpac, as well as RCG. Keep in mind the big short positions on the market as well. If we see any of these stocks outperforming expectations, we could very easily see double-digit gains in these stocks, but we are seeing some big bets that these stocks will continue to fall. These stocks all have more than 12% shorted at the moment, and they include stocks like Orocobre, Sierra, Western Areas, and also some of those retail stocks like Myer, JB Hi-Fi, Retail Food Group, and in that mix is also Independence Group as well as Domino's. So plenty to look forward to. It's going to be a busy month in the month of August, but for July, what we've really seen is a market just treading water in a sideways movement ahead of that key August earnings season.